Hey everyone, the professor here, and welcome to today's Sunday crude oil analysis video, getting you ready for Sunday market open and for what's in store for early this week. Now, let's take a look at this high right here. I still believe that they are probably going to target that high. At the same time, let's review, and a huge congratulations to all of our members in our trading community. We sat on this buy position down at this level right here. Simple Fibonacci got us into that buy, and we can see where the market closed at 78.10. So what I plan to do on this video is to give you a good breakdown of every time frame. We're going to start at the weekly and we're going to work our way down. So make sure that you stay until the end. I'm going to share with you some other information regarding possible entries at key levels based on support and resistance, so you are prepared for the beginning of the week. Of course, if you're in the trading club, you can sit back and relax because all these charts and all these trade alerts are given to you as a member in the trading club. So again, we've got some news that kind of happened over the weekend. Not sure if this is going to impact the opening of crude oil. So we may have a major gap situation. And again, a quick plug to my X account, formerly known as Twitter. You can always jump on there and follow me there as well. I'll be putting out more news and more tutorials to help you out make better decisions. So again, we continue to see these oil tankers being struck. And so that is going to possibly impact what is going on with crude oil, especially at the beginning of the day today. So let's kind of take a look, and let's start from a weekly perspective. Okay, from a weekly perspective, because we've got to look at the big time frames, because again, that's where the big institutional money is being traded. Okay, so again, we can see here that we've had bounces off this trend line right in here, and I'll do my best to shout out the numbers on the right as we go through this video. And again, this video will also be closed caption in over 15 different languages if you prefer just to read the captions as well. Okay, and don't forget, if you get valued at any point during this video, this old guy, the professor who's giving you knowledge, would appreciate that you like the video and of course share it with your trading community. So we are bumping up here from this weekly. Okay, so when we take a look at this weekly turnaround in this area, and for those of you that have been following me, know that we do a lot of work with fibs, and we've been very successful as we move down in time frame. Let's first take a look that we are currently in this 88.6 area, right? Minor rejection towards the end of the week. But again, we are in this critical area, and this 100 area is going to be extremely critical to take a look at, because if we close the weekly above that 79.24 area, and again, the key word there, right, on a weekly is that we close above, then, you know, we could literally see this scenario happening where price closes, comes back to retest, and then we're taking price higher on a weekly standpoint. So for those of you that are long-term day traders, swing traders who hold positions for weeks, this is going to be a key area for you to look at because we can already see that before we had that bounce happen right in this area. And again, we are approaching that area on a weekly time frame. And so this is why, you know, it's important for those of you who are trading in the futures market, those of you that might be trading in the Forex market as well. If you are swing trading for higher crude oil prices, I would hold off until you see that right there break and close above that time frame if it's something that you want to take long term. Okay, for most of us, we're not trading that type of trading style. We are trading a much lower time frame. So that's the perspective there on the weekly time frame. Okay, now as we jump over to the daily time frame, this is where I begin to conduct my core analysis. And so please follow along. If you want to pause this video, if you want to mark up these zones, that would benefit you, because you would kind of have the exact same type of charts that I am currently working on here on this session for you. So we see these two areas that are right here. Okay, we see those highs that were made right there. Okay, and so those will be considered equal highs. So if we mark that right in this area, okay, we see that we're kind of back in that area that we were just talking about on the weekly. Now, we came up pretty close to that line again, right in here. And so now the question is, as we move forward, are we ready to project higher with crude oil? Now, by looking at this standpoint right here, if we take a look at this daily candle right here, okay, and we zoom in a little bit on that candle, right? What stands out to you here from this candle compared to these other three candles right here? So what I want to do is I want to challenge you, right? Part of what I do is all just about education, right? If you can understand some of these concepts, it's just going to help you down the road. You don't need to be just a signal taker. You can actually be a trader. So I want you to go down to the comments below. And what do you notice about that one daily candle right there? I'm not going to reveal it until a little bit later, but where that candle closed compared to the other three candles to the left, what does that tell you based on that candle? And we'll reveal that a little bit later. So go down into the comments and share that as well. Okay. And then I will actually get back to you in the comment to make sure that you got it right. So here, right, we see this candle here. So we've got to naturally, at this point, based on what I'm asking you to reveal, we have the possibility of crude oil coming back up to this level here. Okay. So if we draw a fib level from this high down to this swing low, okay, we can see now, though, that on three different occasions, we have seen price reject this area, which is about 78, 72. And when I say reject, I mean that we have not had price close above that 78, 72. We can see we've wicked there, right? Once, twice, pretty close, and then three times. So that leads us to believe, right? Most individuals will lead us to believe that, and I use this phrase in our trading club all the time, if you knock so many times at a door, you are eventually going to leave, right? So again, we don't know what's going to happen with Sunday gap, but based on this technical analysis right now, there's a good possibility that we're going to see crude oil fall first before we possibly continue back up to the top side. Okay. And that's just based on this time frame analysis that we are working on. Okay. We're going to give you some entry points towards the end of the video. So if you look at it clearly, just from a standpoint of technical analysis, then understand that this right here is leading to the thought process that we're going to see at least price taper down if there was no gap, just based on pure technical analysis. Okay, so this is how we begin to develop our game plan. Now, as we kind of drop down into our 8-hour chart, okay, this is where I begin to construct my chart. And so feel free to construct your chart right along with me as well. Okay, so I'm going to kind of remove this so we can kind of start from scratch. But I'm going to go ahead and mark up these wick areas because they're very, very important to me. Okay, as a trader, I need to know where price has previously rejected on multiple occasions. Okay, so what I first like to do is kind of just mark up the bigger, very well-known frames. Okay, so I like to go to the line chart for that to take out all the noise. Okay, and what I like to do is kind of look at these areas where I can see these peaks. Okay, I can see these peaks on multiple occasions. So if I take this cursor and I start moving it down, I start looking for multiple touches on these peaks. And I can clearly see here that I can see that here. Let me show you where. Okay, so we have a peak here. We have a peak here to the top side. And then we have a peak here to a touch. So we've got, in essence, 3 times in that area price is touched. And so then what I'll do is I'll grab another horizontal line. Okay, and I'll just keep moving down, looking for those major areas that stand out, because I'm going to be tweaking these things afterwards as I get closer. So when I go here, I can see that I've had a touch to the bottom here. I can see that I've had a touch to the top here. And so now you get the point. Okay. And to me, the line charting makes it much, much easier for you to be able to do this in a much quicker state. And then we want to go ahead and move on down one more time frame. And again, you can see touch, you can see touch, you can see touch. So then we'll go ahead and create and come back to our candles chart. And again, this is a big 8-hour time frame. And so we're going to kind of use this area right now to work on. So now that we've established kind of these working areas, then I can go ahead and come down. And again, I use the wicks and I can tweak this because right now, this is my playing field, right? I'll look eventually to the left, but right now I'm not too concerned with all that noise way to my left because I'm constructing a game plan for today, okay? And for the beginning of this week. Now what I'll do is I'll take this here and I'll move this up a little bit to account for those 3 wicks. Okay, 1, 2, 3, right in this area. Okay, and so now that I have this 8-hour rough draft, right? It's kind of like writing a college essay. We kind of have a rough draft. Now we move down into our 4-hour time frame. And so as I swing the chart a little bit wider, and let me grab this here, right? I want to start looking for areas where I can see these multiple touches where it might have been previous support or resistance, depending on which way we're traveling, to allow me to look at the market from a different level. Okay. So as I kind of look up in this level here, I see that this area has rejected several times. So what I'll then do is grab another horizontal line, and I just want to mark this area. Okay. And so on a bigger 4-hour time frame, right, what I begin to do is I begin to trap price. And when I can trap price as I move to smaller time frames, that really allows me to then use Fibonacci extensions to look for the best possible entry, understanding that support and resistance is always going to be key. Okay, support and resistance is always going to be key. So that is super, super important as we are kind of, moving forward and what have you. So, if you're getting, again, if you're getting some value on this educational session as well, definitely go down to the bottom, hit that like button. If you're brand new, consider subscribing to the channel and hitting that notifications bell so you do not miss out. Okay, so let's continue. Now that we are on this 4-hour chart, we are going to drop down to our 1-hour chart. Okay, I'm going to make this lens a little bit smaller because I like for you all to see what I see on these charts. Okay, so now you can go back here and you can start here from the left from a relatively shorter time frame. This was last Monday, February 12th. We can see that price came down to this level. We can see that price came up to this level. So now that I'm at a 1-hour time frame, see, I could adjust this just a little bit, right, to kind of account for this ceiling, this support or ceiling as well, turn support, right? And then also this area of support. See, so I can tweak this. So you've been able to see now with this methodology of starting at the higher time frame, how by working down, you begin to trap price and you begin to see the lower levels of support and resistance. And then this is where, inside of our club, we're sharing our buys and our sells based on additional information like our Fibonacci levels as well. So now that we've trapped price in here, right, we begin to expand this chart. I'm going to make it a little bit easier. And we begin to look for these key areas within price. So this was the area that we had taken off that Fibonacci level later in the week. Now, again, not that that wasn't a strong area based on previous support and resistance, but we had price come down into support. We had price come down into a strong fib level, right? And so this was a very high reward, low risk trade opportunity because we had multiple things working for us. Okay, we had fib levels and we had an area of previous support. Okay. So as we move forward here now, we want to take a look at where price is at. Now, price currently, right, ended up closing above this $78 mark. Okay. And price ended up closing in an area of possibly coming back to retest that area. Please understand that these lines have a particular number, for example, 7806, this line is sitting on, but these are called areas. It's never going to be an exact line. So you want to look for areas of value that show you where price is gone, but understand that a zone, an area, is never going to be an exact actual line. Okay. So as we expand the chart, now we begin to see, okay, where did price close? So what we're going to do is we are going to go ahead and grab a text box and we are going to label this the gap. Okay, so this is where price closed on Friday. Okay, and we are going to begin to develop a game plan for what happens for price, whether price goes up or down with the gap. So now what I like to do is go down on this 1 hour chart and look for previous floors or support on a 1 hour chart. So if we go right here, we can definitely tell that this here, let me grab this eyeball here, as I call it. This floor here, okay, was a previous support level. This was previous support, broke eventually that support level. This was support. This here was support. And so we're now in this area where price has come to before. So there's a lot of uncertainty here about whether we are going to obviously continue up or continue down to our next level. That's why we've established where the gap is. And I'm going to leave this eyeball right here for the gap. So I have it saved for our chart. And again, those of you inside the trading app, you'll be getting this full chart and video analysis as well once this recording is over. So now, depending on the gap, we understand that if we gap down, right, on a Sunday market open gap, then we are going to wait to see if price comes back into this floor right here. I'm going to go ahead and change this candle color to red because that would be a sell gap. So if we gap lower into this area, then we are going to look to take a buy position to eventually close this gap back up to the gap area. Okay. If for whatever reason a gap has a massive gap down, then we do the exact same thing. And this is why we jump on at 6 p.m. Eastern Standard Time in the app and we look at gaps together as a community, not just for crude oil, but for all the indices as well. We would then take a position from here and swing this position back up to close the gap. Now, vice versa, if we have a gap, let's say that gap's up in this area, okay? And I'll go ahead and make this candle green. Then we're going to understand that there is a level right up here that we are going to be looking at. Let's make that white, keep it consistent, right? So it doesn't matter where price gaps, we are prepared. And if it's a small gap, let's say gaps here, right? We are prepared to understand that gaps, usually when they open on crude oil, they run for a bit and then they eventually turn back around, right? Now, again, if you've never traded gaps, real quick warning, gaps can stay open for a few minutes, for a few hours, for a few days, and in very rare occasions, okay, a few weeks. Okay, we're seeing that now on natural gas. And again, I'll be doing a natural gas analysis inside the app at the end of this recording. So if you remember, I got you. We're going to be doing natural gas as well. So understand for crude oil, most of the time, right? But if this does not close at the opening of the session within a couple of hours, usually you begin to see that close either later in London session or even on the next US session. Okay. So understand that if you are going to trade the gap, for me personally, it's 50 cents or more to trade that gap. Okay. And then understand smaller lot size, okay, is going to be important for you because this can stay open for a few hours or again, a few days, but that usually is not the norm. So as we get back into the chart here, okay, this is going to be our scenarios for the gap depending on what happens. okay, depending on what happens. So this is kind of what we're going to be waiting for the beginning of the week. These are going to be key levels that we talked about. We'll be trading off of these levels down in here. Okay, we already saw what happened here with price action. And I kind of want to go back now, or actually, let me go real quick to the 15-minute chart so you can see how the price action worked beautifully last week from these levels. Okay, let me grab this eye here. Let's just grab another one here. We had taken sell positions from this level. Okay, we took it down to this level. This candle right here gave it away. We had a retest on a smaller time frame. We took it back down here. Then we took this off the Fibonacci levels, and that's how we closed up the week. Okay, earlier in the week we were trading these exact same levels as well. So again, this is why, in my opinion, a strong, good trading community with people who actually care about you as a trader, and no fluff, no hype, right? Real people, people that are working full time, doing this thing is a great place to be. So that is kind of the perspective from the 15-minute time frame. Now I want to jump back over to the daily, as I promised, so I could answer that question that we had at the beginning of the video. Okay, if you remember, we talked about this particular candle, right? So in my opinion, even though we have this area of resistance, right, this candle closing above this candle here leads me to believe that there's a potential for longer term higher movements. And again, I think we are going to target these two wicks up here at about $79.54 to $80 a barrel, probably by the end of the week. Now, all of this would reset if we happen to gap up in this area, right? If we gap up in this area, then of course we met that, and then we're going to be inside of the app giving you updated charts on these higher levels. But for now, we're going to stick to where price is more current, what is more likely to happen. And again, when that changes, then we update you in the app on an hourly to 2 to 3 times a day basis. So I hope you got some value from this video. That is our start to crude oil. I hope you got some value. If you did, smash that like button. And there's going to be a few videos popping up on your screen here. Take a look at that. Thank you to everyone who's providing some awesome comments and feedback, especially on the crude oil, how to trade with Fibonacci levels. I just got a message today saying how they went back and back tested, and they could have saved them over $5,000 in mistakes and lost trades. So they went back and realized their mistake. And welcome to you for joining the club as well. And also take a look at the crossover trade analysis. For those of you that don't have a lot of time, I created a crossover on 2 different moving averages that can get you in and out of the market much, much faster. Okay. Thanks for watching. Happy trading. Of course, don't forget that sharing is caring. So if you get some value on this video, definitely share that video. And I was looking for where I had that, but I want to go ahead and drop off this here. Thanks for watching. Happy trading, members. I'll see you in the app. Happy Sunday, everyone.